Thanks so much for joining us here on a Tuesday. I'm Marlon Bowling with you here on the Market Day Report as we keep an eye on your ag commodity trade. And we welcome a little extra expert help along the way as well. This time around, well, let's go check in with Brian Hoops. He joins us now by telephone, and Brian happens to be with Midwest Market Solutions in Springfield, Missouri. And Brian, I guess first off, I want to kind of get a backyard report from you here as far as what weather conditions are doing around that neighborhood there.
Well, you probably don't want me to tell you it's going to be 80 degrees, sunshine, beautiful day here, but our office, one of our offices up in Minnesota sent me a picture this morning. They got snow on the ground, very cold temperatures. Our clients and customers in Iowa and South Dakota reporting very cold and windy conditions, very wet conditions, so not very favorable up in the northern part of the Midwest.
Snow on the ground. Boy, I tell you what, winter does not want to let go in some areas. Now, we had the planting progress report that came out from USDA yesterday, of course. That was in their progress and condition report that came out. It does so every Monday afternoon. And I think some of the trade was taken a little bit aback by the fact that we had such progress in the corn and in the soybeans, where it was actually just, well, soybeans were double the normal pace and corn was right at about where it's supposed to be for the 5-year average, only 1 point below the 5-year average. A lot of folks thought maybe the planting pace would be a little behind. So from what I understand, it sounds like maybe the eastern half or 2/3 of the Corn Belt should have pretty good planting progress here this week. They might be able to knock out a pretty good chunk of that action before the very heavy rain sets in this coming weekend then.
Yeah, you know, states like Illinois, one of the biggest corn-producing states, are above their normal pace, 34% done, and could move over 50% by next weekend if the weather holds out. Missouri's another state that's above average. Indiana's above average, but it's some of the other states like Iowa, behind normal pace, South Dakota, Minnesota, Kansas, all these states are behind the normal pace, and the market seems to be finally starting to pay attention to those numbers. A little bit of initial shock in the overnight trade. We traded lower because of the planting pace overall being better than what was expected. But when the numbers look like this and the forecasts are talking some very cold and wet conditions through this week and into the weekend, there's not going to be a lot of field work being done in some of these states that are already behind. And with acres being down compared to a year ago, the market really can't afford to keep no premium as far as weather in the marketplace, and I think we're starting to add back some of that in there at this time.
So with a little weakness setting into the market last night during the Globex trade after this report came out, we did have a lift here about an hour or so ago in the grain trade, and we can take a peek here. The corn market definitely turned around. It has gone up by a few cents here in the early going today. The May corn was about 4 higher at 363 1/4, and new crop December was up 3 1/2, 387 1/4. Now the soybean market, you know, we cannot hang on to gains in the soybeans. Apparently, we have the May contract down about 4 1/2 cents, and November was down 4 3/4 at 962 3/4. Realistically, I mean, we are looking at very large crops coming out of South America. How much rally potential is there in the soybeans at this time of year here, Brian?
You know, the upside's limited, I think. Yesterday we had a real good rally in soybeans, and we also started one on Friday, rallied up to key resistance around 972 1/2 and have backed off of that area. And until we can close above that, we have very limited upside potential. If we could close above it, then you can start talking about funds covering some short positions, as they would have a reason to get out of shorts. You'd actually starting to be seeing a technical pattern where we're making higher highs and higher lows, and that'll encourage some short covering. So, yeah, we can have a bounce in here, but it's going to have to come from that short covering, as we really don't have a fundamental to give us strength in the soybean market or the soybean meal market at this time.
I want to touch on Chicago wheat, and then I'll pause for a little break here, Brian. On Chicago, we had the May contract just fractionally higher. July was up about 1 1/2 at 420 3/4, so a firmer tone there. Kansas City wheat had been a little bit higher too. We're up about 4 cents on that May contract. We'll pause for a break, and we'll come back in just a moment, and we'll talk about our livestock trade with Brian Hoops when we come back. Well, we're back with you here as we take a look at our livestock sector. We're talking with Brian Hoops. He is with Midwest Market Solutions in Springfield, Missouri. And Brian, thanks again for joining us here. I want to touch on this cold storage report that came out after the markets closed yesterday. Of course, we had I don't know, some analysts call it a technical correction in the cattle market yesterday based on the cattle on feed report that was last Friday. But here on the cold storage report numbers that came out after the close yesterday, we had the beef actually down 8% in the freezer inventory here compared to a month ago, and we had the pork down 3% from a month ago. Overall, you combine those two and they average out for the total red meat frozen inventory down about 5% from the end of February. Now, compared to a year ago, the beef is down 4% and pork down 10%. So given that, let's get your thoughts here on what you think this might mean for the future direction here on the meat trade so far.
Well, I think it is a positive from a longer-term standpoint that we're seeing a drawdown in cold storage in here. At some point, the packers going to have to buy their way back into rebuilding the storage, and that's going to have to come from stronger demand and better price levels. So we're having a small technical bounce off of this news. We're kind of pulling back here at this time in this cattle market. I don't think there's a lot of downside risk in cattle at this point. April's set to go off the board here later this week, and June is holding a huge discount to the cash trade. Cash should be at least steady, maybe even a little bit higher this week. And with the cattle weights falling below last week's levels and dropping nearly 30 pounds below a year ago, when you start doing the math, we're going to have less tonnage on the market available this summer than a year ago. And this was a major change from expectations 3-4 months ago when cattle weights were much heavier. We thought we were going to have burdensome supplies, and that has not been the case. Those deferred contracts have really not corrected themselves to reflect that.
So last week, from what I understand, the cash cattle market was in the low 130s. And we had a few truckloads that had sold reportedly in Texas yesterday, and they were more in the upper 120s yesterday. That'd be more in line with what the April futures are doing on the live cattle board, right?
Yeah, and they're still going to have to correct a little bit more. I think, April's going to be hanging very close to where the cash trade is, and that's up in that upper 130 range. I don't look for that to change very much, but it's those deferred contracts with June at 115, August a little over 111. They're still holding big discounts to the cash, anticipating cash is going to fall, and I don't see that happening unless cattle weights start to increase, and that is, certainly a possibility, but as things stand now, there should be minimal downside risk.
All right, and a little follow-through buying in the hogs, too, with them being up about 60 to 80 cents today, so that would be 2 days in a row. We'll keep an eye on that situation as well, see if they can establish a foundation there. Brian, good to visit with you. Thank you very much. Appreciate that. Brian Hoops with Midwest Market Solutions in Springfield, Missouri. And Christina, there you have it. A little bit of a firmer tone going on in the livestock trade today, but the jury is out as far as what the long-term implications might be.
Yeah, a little hotter, though, in the hogs. We haven't seen that for a while.
Firming up a little bit, but nothing too exciting yet.
Not yet. That could change. We'll keep checking in with you. Thank you, Marlon.